Points. Let's bring in Tim Seymour, CIO of Seymour Asset Management and a CNBC contributor.
Hey, Contessa.
Help me make sense of these wild moves.
Well, not for the faint of heart. I still think there's a question about tech valuations, although NVIDIA's valuation doesn't really bother me. But and you've moved with a couple of the other, call them Mag 7s, as we do, where value is kind of interesting again if you're looking at Meta and whatnot. I just think there's this confluence of we still don't know what we're paying for and what it's going to deliver now as opposed to out there. I still think there is some sense of concern around circular investments. And even though for NVIDIA as being call it an infrastructure story, an AI infrastructure story on top of its core business, I think it's probably worked for NVIDIA. I think for the rest of the market, it's they kind of gave you what they told. We had a chance for the analyst community to dissect and think about that. Certainly the buy side probably expected what they told us yesterday. And I think you get a little bit of that sell-off.
When I'm looking at the S&P 500 here, the laggard is Robinhood. It's off by more than 7%, but you've got Interactive Brokers down more than 2%. On the other hand, Walmart is leading the S&P as the gainer with 5.8%, that stock higher by 5.8%. Let's talk a little bit about Walmart and what it means to have this really blockbuster earnings report amid quarter after quarter of comp improvement.
And just before we get to Walmart, that's the whole point. I mean, Robinhood and some of the digital economy, those aren't strong halves. And I talk about in terms of the investor group. And so bring it back over to Walmart and where we are with a story that's hardly cheap, right? If the market's worried about valuations, then they should be a little skittish on Walmart at 36 times forward. But there's a dynamic here that I think is best of both worlds. Walmart is giving you both that investment into technology and maybe AI, but more importantly, really where e-commerce and efficiencies have paid off. They've paid off in the gross margin, although the gross margin was a little weaker here. But I think category by category, we're seeing Walmart is taking market share. But Walmart, more importantly, seems to be more focused on profit than revenue. And I know that's crazy for the world's biggest retailer, but that's part of the story here. And I guess, what's fascinating, maybe the more interesting part about the Walmart story, even though it's the move from the New York Stock Exchange to the NASDAQ 100 is something that embodies and signifies where Walmart probably sees themselves as a company. It also probably helps in terms of where you get follow through from an investor base that are tracking the NASDAQ 100. So fascinating that Walmart is flying in the face of a market that's concerned about valuations when Walmart's never been more expensive relative to itself and even relative to its peer group other than Costco.
Well, that makes it much more like a tech company right now then. Is Walmart, do you think, a risky bet at these prices?
I think there's going to be the ability to sell off Walmart if we see the two pillars of the story here, which I mean on the demographic story of the consumer. So the lower income consumer and the higher income consumer and the broader merchandise mix. If we start to get any kind of a growth scare, I realize markets overall might be sniffing some of that out. And that's where you would see a lot of pain across markets. But I think until we start to see that, Walmart is very well positioned. Again, we talk about massive investments into technology and where logistics and ERP and what has been brick and mortar for them for a long time is now really, really paying off and showing the difference between them and almost everyone other than Costco. But I still think Walmart is eating into Costco.